When a criminal enterprise succeeds, it runs into an unexpected problem. The sheer physical weight and volume of the cash becomes a massive logistical burden. You can't simply walk into a dealership and buy a fleet of luxury cars with duffel bags full of $20 bills. In today's highly regulated economy, spending large amounts of physical currency immediately triggers automated alerts and draws the attention of law enforcement. A mountain of untraceable bills is effectively useless. The real objective for any successful syndicate is to transform that dirty paper into spendable, legitimate wealth without leaving a trail for investigators. This challenge notoriously brought down Al Capone. Despite running a violently enforced empire, his downfall was strictly financial. He simply couldn't prove a legal source for his income to tax authorities. During Prohibition, his illegal alcohol sales generated immense profits, creating the ultimate cash liability. He had millions in physical currency and no way to openly deposit or spend it. To solve this, Capone bought a chain of coin-operated laundromats. By routing his bootlegging profits through these heavily cash-based businesses, he could mingle his illicit funds with the daily receipts of everyday customers. When he reported his earnings to the IRS, the illegal cash now had a perfectly legal origin story. He hid his true income in plain sight, an act that literally gave rise to the term money laundering. Solving that initial problem birthed a sophisticated three-step pipeline. Today, this system operates globally, invisibly cleaning dirty cash and turning it into untouchable financial power. The first and arguably most dangerous stage of this modern pipeline is placement. This is the exact moment raw physical currency crosses over into the formal financial system. The immediate obstacle is that banks and regulators strictly enforce mandatory reporting for large cash deposits. Dropping a massive sum at a teller window instantly triggers a red flag. To bypass digital tripwires, criminals rely on a calculated engineering solution known as structuring or smurfing. This diagram shows exactly how smurfing works. If an operative has $50,000 in illicit cash, they break that central sum down into 25 separate transactions of $2,000 each. Keeping everything below the reporting threshold, they distribute these smaller sums across various bank branches over several days. This scatters the data, preventing the software from recognizing a suspicious pattern. With placement complete, the immediate physical risk of the cash is neutralized. Now, the illicit funds are quietly embedded into the digital banking system without setting off a single alarm. Once inside the system, the money enters the second and most complex stage, layering. The objective is to sever the digital connection to the source. They achieve this by generating a deliberately convoluted paper trail. By moving the money quickly and constantly, they aim to exhaust the resources of auditors and international tax authorities trying to follow the sequence. Look at this diagram showing the first layer of evasion. The newly deposited funds in the origin bank are rapidly wired outward into offshore accounts or converted into high-value assets. Those policies are then quickly cashed out, and the money is wired through a dense maze of shell companies located in global tax havens. Through layering, a single traceable deposit is transformed into an impenetrable labyrinth of international transactions. Financial forensics and asset recovery become practically impossible. The final stage of the pipeline is integration. The thoroughly layered money is now prepared to safely re-enter the legitimate everyday economy. At this point, the funds are deployed as clean corporate investments. The syndicate might purchase luxury commercial real estate or fund the operations of legally registered businesses. Alternatively, they might set up fake corporate loans, where the offshore shell companies essentially lend the layered money directly back to the criminal entity. If tax authorities investigate the real estate purchase or the sudden influx of capital, the criminal can present pristine documentation proving the funds came from a successful, documented business venture. Integration completes the transformation. The illegal cash has effectively ceased to exist, replaced entirely by legally defensible corporate wealth. In this final state, the criminal is no longer an outlaw. They operate openly as a sophisticated, untouchable corporate entity. The sheer mechanical efficiency of this three-stage system completely sanitizes the capital, erasing any trace of the violence or illegal activity that originally generated it. This pipeline operates constantly in the background of international finance. It acts as a permanent, active bridge between the global underworld and the legal economy. Successful money laundering means illicit wealth isn't hiding in the shadows at all. It is legally woven directly into our cities, our storefronts, and our institutions, hiding perfectly in plain sight.